Alright, what is good, traders? Welcome back to the channel. I am your biological father. Alright, well that was a bit weird. But anyways, just before we get into the video, I'm about to show you like a clip of the video like it's actually going to start. This is an intro to the intro. And I'm just making it to let you guys know that this video that you're about to see was filmed before I got my camera and upgraded my setup and everything. So the quality is not great. The camera quality is not great. Audio quality is not great, I'll be real. For some reason I keep coming close and out of my mic, so the audio spikes and it's a bit weird, but I thought I'd post it anyway because there is some useful information in this video and hopefully it can help some of you guys out. But if you're wondering why the quality is just dumped, yeah, that's why. It was recorded like a while back and I'm just now uploading it, so enjoy the vid. But yeah, the quality will always be better than the current video you're about to see. Alright, what is good, traders? Welcome back to the channel. My name is Daniel FX and today I'm going to be teaching you why the large majority of your levels are getting violated, why you're getting stopped out on more trades than you think you should be, and why it feels like the market's after you when in actuality you may just be drawing your levels a little bit incorrectly. Now before we hop into the charts, make sure you're following my social medias. My TikTok's here, my Instagram's here, Discord is here also, and make sure you stick around until the end because I'm going to be giving you one system, one little strategy that you can implement today, and it will greatly improve your win rate and stop you from taking just unnecessary losses. So yeah, let's go ahead and jump right into the charts and I'll show you guys what I'm talking about. Alright, traders, so now that we're actually on the chart, let me show you what the large majority of just retail traders, impatient, undisciplined, inconsistent traders are actually doing when it comes to trading. Now this is your most basic strategy, so support and resistance, supply and demand, whatever you want to call it, it's the same principle, but that's having an upper band in the market and a lower band in the market and buying at the bottom and obviously selling at the top. So your large majority of traders have a resistance mark right here. You see that price has respected it multiple times, 3 times, and what they simply do is they wait for price to come back into that level so they can then sell off or place a short position and catch the short movement. So a large majority of traders are kind of trading like this. Now dependent on whether or not you're waiting for a candle, it's really the same kind of principle, but let's say I am just your standard typical retail trader and I just immediately sell at resistance without seeing any sort of confirmation. I am then targeting the next lower low for about a 1 to 4 position. Now oftentimes what actually happens is they will enter, price will maybe move a couple candles in their direction and then immediately reverse before taking them out. Now I may have just given you PTSD, but has this happened to you a couple of times in the market where you really believe a level is going to hold and then it just reverses on you and you're sitting there thinking like, yo, like what just happened? Was that not a very valid level? Did I draw it wrong? Or you just kind of get confused as to why that has happened to you. And then what makes it even worse is a little bit later on, you see price reversing and going back into your profit and you're thinking, I should have done this, I should have done that, X, Y, and Z. And it's just a very annoying situation to be in. Now, what can actually prevent you from getting yourself in this scenario is if you just wait prior to seeing the liquidity sweep. Now, what is a liquidity sweep? You may know what that is. You may know what liquidity is, whatever the case might be. But I'm going to break it down in my own little manner. Now, whenever you have support and resistance, whenever you have a key level in the market, you have liquidity resting there also because the market runs on liquidity. Whenever you have an accumulation of wicks or whenever you have an area of interest, any area of interest has liquidity resting there. And in this example, because we have our resistance or our demand zone, we have liquidity resting above. So we know that a lot of the time, price wants to take out the liquidity. We may want to continue further down. We may want to sell off and actually have this bearish move. But before we do that, we want to take the liquidity first. So right here, what your typical trader would have done is they see price come up into this area. They then don't wait for a confirmation. They don't wait for price to slow down or to show them that they're having a liquidity grab first and foremost. And they just end up entering a little bit too early. But what you can actually do in order to avoid this is having a strict set of rules, a strict confirmation. I like to call it my entry candles, which I want to see before I actually come to enter a position. Now, if you're on the learn and earn, you hear me talking about this a lot and I refer to it as depletion. But essentially you want to see the market start to exhaust itself first. Now you can do this in a number of ways, but in this example is after the market has created a lower high like this. So we've created a higher high, a lower high, and then broken that. What you simply want to see is a change of character or a break of structure back in your direction. And you see this white candle, this white bearish candle comes down and breaks the structure here to the left. Now, after you see a break of structure in your direction, you can use that as an entry. Preferably, it would be a body, not a wick, but it's kind of the same principle. That's one way that you can do it. Now, the second way that you can do it is you actually want to see a depletion like this. Now, even though we are rejecting both sides, and either way, the fact that we're at a key level
and price is starting to mitigate and slow it down, kind of, to me, indicates that we're maybe looking at reversing. And on top of this, you may also want to look for like your basic candlestick patterns like a doji, a gravestone, etc., which would again indicate that price is failing to break, there's not enough volume, and that the level is going to be respected. Once you combine this with the fact that you've already seen a liquidity swipe and a break of structure, it then gives you a very good valid entry that you can use. And yes, the risk to reward might be slightly smaller, but you have a lot less or a lot smaller probability of you getting stopped out quicker. So right here, a very standard stop loss. You can maybe even use your EMAs to set your stop loss, but that's a separate video. And you can see that usually after the liquidity sweep, again, this is hindsight, I'm not going to sit here and be like I would have done this X, Y, and Z, but you can see that simply just waiting 20-30 minutes can save you a very large amount of money, a quick stop loss. Again, if you want to learn and earn, you always see me wait for the candle to shut. Now, listen, if you stayed around until the end, here's one thing that you can implement in your trading today that's actually going to stop you from getting stopped out a lot more often, and it's going to save you money at least once, I guarantee it. And that is never entering while a candle is still moving. Always enter on candle closures. If you're trading the 5-minute, wait for a 5-minute closure. If you're trading the hourly, wait for an hourly closure, so on and so forth. But entering while a candle is still moving is one of the worst things that you can do, because oftentimes within the last couple seconds, the last couple minutes, an hour of a candle, everything can change, and the information that you think you may be getting can be entirely invalidated in the last couple duration of a candle. So honestly, just wait for your candles to shut first and foremost, and look at the difference it makes in your trading. Anyways, we're going to wrap it up here. My camera's unfocused.